My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Great America. I'll be one of my friends. I'm just trying to save you some money. My job, not just to entertain, but put it in context, so call me 1-800-743-CNBC. Tweet me at Jim Cramer. Nobody believes me when I say that Fed Chief Jay Powell wants your portfolio to go down. Because it's too cruel. I mean, how could anyone ever try to hurt your precious stocks? What kind of public officials want you to have less money and feel less confident about your retirement? The Federal Reserve, that's who. And after another not-so-hot day where the Dow declined 147 points, S&P shed 1.06%, NASDAQ lost 1.73%. You need to recognize that Jay Powell wants you to be worried about your job, so you're less likely to job hop for a higher salary. That's wage inflation. Though job hopping has become increasingly difficult as Amazon announces a hiring freeze at corporate, Ford's canning white-collar workers, Lyft's laying off 13% of its workforce, there's job freezes everywhere. And that's just the beginning. Because every time the Fed raises interest rates, they're opening the floodgates, yes, for more layoffs. Right now, Powell's terrified of persistently high inflation, and to crush inflation, he needs to wreck the whole economy. He wants people to come back to work after taking various COVID buyouts or government handouts because we've got a massive labor shortage. Makes sense. He doesn't want you using your portfolio to finance a new house or even just doing a renovation. The way to do that is by pushing stocks lower. Powell's bringing the pain. Yes, he's bringing the darn pain.
The house of pain.
Because it really is the only tool he has to stamp out inflation. But every time I explain this, people always stop me and say, I mean, come on, Cramer, you're kidding, right? I mean, like, you're like kidding. Said at the ballgame yesterday, come on, Cramer, you're kidding, right? He doesn't want the stock market. Well, that's ridiculous. He doesn't care about the market. If anything, he wants the stock market to go up. That just isn't true. And you know what? I finally got it. We got conclusive proof at yesterday's press conference with the Fed. It came during Powell's talk with reporters, a painful interchange that he uses to bludgeon his points home. Here's the setting. When Powell issued his terse statement at 2 p.m., where he raised interest rates by another 3/4 of a point, he included some mystifying language about how he's cognizant that there's a time lag between when the Fed tightens and when it impacts the economy. And that lag creates some complications. Some knuckle-headed traders immediately assumed that somehow that was Powell's way of giving them the all-clear signal that he's almost done tightening and that it was time to buy stocks. So the market roared right into the press conference. The buyers, what they did was they jumped the gun. They wanted to be ready in case Powell explained that it was too risky to keep raising rates so rapidly because of the lag factor, a statement that would allow stocks to roar through the end of the year. They thought Powell would blink and throw in the towel on the war against inflation. But then a funny thing happened. Midway through the press conference, the market gave up its bountiful gains and went lower, as Powell reminded us that he's a super hawk, not a lovey-dovey. But also in the middle of the press conference, a reporter without access to current quotes who didn't know the market was rolling over said, "It looks like the stock market and bond markets are reacting positively to your announcement so far." Is that something you wanted to see? Is that a problem or what? How that might affect your future policy to see this positive reaction? Now listen to Powell's answer and listen closely because it proves my point. Here's what he says, quote, "What I'm trying to do," he tells the reporter, "is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we think is sufficiently restrictive." He went on to explain, "The level of rates that we estimated in September, the incoming data suggests that actually going to be higher, and that's been the pattern." End quote. That's the worst thing he could ever say for the stock market. In other words, if anything, he wants to tighten more, not less than he did 2 months ago. A sentence later, Powell explains, and I quote again, "I would also say it's premature to discuss pausing, and it's not something that we're thinking about. That's really not a conversation to be had now." End quote. In short, Don't even talk about pausing the rate hikes, let alone say that you want to do it for the stock market. Rather than worrying about tightening too much, Powell made it crystal clear that he's worried about the mistake of not doing enough or the mistake of withdrawing our strong policy and doing that too soon. Powell usually is a calm guy, but this was maybe the most frustrated I've ever seen him. To sum it up, an admittedly clueless reporter asked Powell actually wanted the stock market higher because that's where he thought it was. And Powell showed his true colors with a statement basically saying, "Are you kidding me? I don't want the market higher. I am anti-inflation, and if that kills the market, so be it." The idea that stocks might be rallying on his Jeremiah seemed to horrify Powell. So he revealed himself as one of the biggest inflation hawks out there. Next thing you know, right when Powell is finished his most bearish soliloquy since he took the job, an orderly decline turns into a full-fledged rout as the clowns who bought stocks up on the initial statement dumped them furiously right into the press conference. Now, I searched for reasons why Powell would turn so harshly on this reporter, who was simply trying to find out if he was happy that the stock market liked his statement. And I came to the conclusion that I've been pushing endlessly. The Fed doesn't just want the stock market lower, they need it lower. Because lower stock prices make it more difficult for companies to finance their growth. And we don't need a lot of growth right now. We don't need any. If Powell's going to beat inflation, he needs everybody to spend less, and that very much includes business. Of course, lower stock portfolios mean less spending for individuals, and he needs that too. To me, Powell's comments mean that you should prefer bonds over stocks here, that the 2-year Treasury is a better bet than Take-Two Interactive, the 5-year superior to 5.9. He wants to stop it with the wealth creation, start it with the wealth preservation. I actually think he's right for the long term. This interchange reveals Powell as someone who thinks that higher prices are inflationary, and he doesn't like inflation anywhere at all, including the stock market. Hey, this guy probably likes his tires flat, his floaties deflated. Now, of course, he's talking about stocks as a group. His comments, though, mean that the Fed's far from done tightening, which means you got to keep selling the tech, because that's the most speculative group out there, and he's killing speculation. When it looks increasingly cyclical, too, as we see the results this earnings season seem very affected by the slowdown. Instead, you got circle the wagons around the banks, the oils, the healthcares, the consumer products. Those stocks, like ELF that we have on tonight, can go up without causing inflation because they're more conservative and less, well, I don't know, crazy. The Dow Jones Industrial Average is filled with relatively cheap stocks because traders assume these 30 old-line companies are the most vulnerable to recession. But that's just not true. That's wrong. The Dow components all know how to handle a recession. Silicon Valley, on the other hand, has forgotten how to cope with a downturn if it ever even knew how to do it the first time. Let's call them Silicon Salmon, because the bears are ripping off their darn heads and eating them. Here's the bottom line. Fed Chief Jay Powell doesn't want you making money in the market right now. He wants you to curb your enthusiasm for stocks, maybe even bury your capital in treasuries. And he certainly doesn't want you to interpret any of his comments as an all-clear signal to buy stocks. The only time I've ever seen Powell nearly lose his temper was yesterday, when someone got the impression that he was aiding the cause of the bulls. You can bet he'll never make that mistake ever again. Brandon in New York. Oh, Brendan!
Hey, Jim, how are you?
Brandon, I'm real good. How about you?
Good. I'm interested in the electric vehicle space, and I'm currently in Rivian Automotive. I bought it at some highs and lows, but I was wondering how you think the industry will perform in production over the next year, and if it's a good time to buy, sell, or hold.
Well, I'm not as bearish as Adam Jonas today, who basically put out a piece saying, look, we may be at a moment where there's just too much EV worry. I will say this. You're in a speculative stock, and speculative stocks are not doing well, and I am avoiding speculative stocks even if I like their products. Let's go to Stefan in Nevada. Stefan.
Yes, Jim, thank you. Goodyear Tire just missed earnings. What are your thoughts on GT?
Disappointing. I had higher hopes. I thought they had a better control of things. I was wrong. Let's go to Robert in New York. Robert.
Booyah, Jim. When are we going to get another by you?
Which one?
When are we going to get another book? When are you going to write another book?
Oh, another book, man. I'm trying to write one. Jeez, you know, the wife. Lisa's not that happy with me spending so much time doing that stuff anymore. What's going on? How can I help?
With the possible food shortages that the media is reporting, what is your take on Conagra Brands?
Well, remember, Conagra's more of a taker. They need prices lower. If you really believe there's food shortage, then you got to buy a fertilizer stock like a Mosaic. Or even better, I would buy Deere, DE, which is a total winner. Powell doesn't want you making money in the market right now. Look, what can I do? He doesn't. The last thing he's doing is aiding the cause of the bulls. We learned that yesterday for certain. Mad Money tonight. Qualcomm struggled today after earnings. Is there more to the story that the street's not telling you? I'm digging deeper with the company's top press. Then ELF Beauty just hit a 52-week high. I'm finding out more about the secret sauce for the cosmetics company with the CEO. And believe me, it's nothing conventional. And semiconductor stocks are the talk of the tape this week. I'm discussing where the government stands on the CHIPS Act with Commerce Secretary Gina Raimondo. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.